So hi everyone, it's Wisdom John right back here, and this is lesson 16 of Forex trading. So in this lesson, we are going to be looking at trend channels. This is the best way to trend channels, right? So a trend channel, also sometimes called a price channel, is a set of parallel trend lines, support and resistance lines, defined by highs and lows of an asset price action. So there are three types of trend channels. We have ascending channel, and it is designated by higher highs and higher lows. Then we have a descending channel. It is designated by higher highs and lower lows. Lower highs and lower lows. Then we have a horizontal channel, or which happens in ranging market. So here when we look at the chart, we can see that this is a rising channel, or what we call an ascending channel. It is formed by forming higher highs, higher low, higher high, higher low, higher high, and then higher low. Okay, then you have this descending channel formed by this lower low, lower high, lower low, lower high, lower low, lower high. Okay, then we have this sideways channel. It occurs between parallel lines within a market which is ranging. Okay, so we are going to start off with ascending channel, and we say an ascending channel occurs in an uptrend and is made up of higher highs and higher lows. So to create an upward or ascending channel, you simply draw a parallel line to the same angle as an uptrend line, and then move that line to position where it touches the most recent peaks. Okay, so for example here, and look at this market, this is a clear uptrend because it forms what we call higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Oh, sorry. It forms here higher low, higher high, then higher low, higher high, then here higher low, and then higher high. Okay, so if we are to draw an uptrend line, we first draw. We are saying that when you're drawing an ascending channel or an up channel, you have to first draw what we call a trend line. And then after drawing this trend line, okay, you draw a parallel line to this trend line like that. And this is what we call a channel. Then the price will be moving within this channel, okay? I want you to note that not all the times the price is going to touch your channel exactly. For example, here it did not touch it exactly, but it is still a valid one. So we said for a trend line to be valid, it is supposed to touch 3 points. So you have to first draw a trend line which is valid. So you have to connect this as the swing low. That is the second swing low. This is the third swing low, and then the trend line is confirmed. So when a trend line is confirmed, we can use it to draw a channel, and then here it touches the fourth time. When it touches the fourth time, it is purely confirmed. Okay, so here the price refused to come and retouch the level, but it is still valid. Okay, so after that we connect this point to this point to this point and to that point to create what we call an ascending channel. So after connecting those points, so we connect them from here, connect to that one, connect to this one. Do not force it to come and connect here because it will not be valid. Leave it to be a free line. Okay, after it has connected, we have to draw a parallel line to this one. So after drawing a parallel line to that one, like that, we shall move this line to connect these swing highs, and then that line will be, if moved away, it would be like that. That's what we call an up trend channel or an up channel. Okay, so in a descending channel, the descending channel occurs in a downtrend, and it is made up of lower lows and lower highs. So to create a down or descending channel, simply draw a parallel line to the same angle as a downtrend line, and then move that line to a position where it touches the most recent swing lows. So we say in a downtrend, price moves forming this pattern: lower highs and then lower lows, lower high, lower low, 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 lower high, lower low. So we have to connect to first to draw a downtrend line. Okay, after doing a downtrend line, then we create a parallel line to that downtrend line. So we shall come and draw from here, connect these points which are connectable. Do not connect lines which are not connectable, like that. Okay, after that we draw a parallel line to that downtrend line. It would come to that format, like that. Okay, so sometimes somewhere the price will protrude outside, like here. Sorry. So like here, the price tries to break through here, and then maybe there. The price tries to break through, but it still remains a valid one. Okay. So when you look at the channel, sorry, when you look at the chart here, the price forms what we call a lower high, then it moves down, lower low, lower high, lower low. Then you can ignore that one, so it is valid. Then like that, like that. Okay. Like that. So here, what happens is that we have to create a swing highs. Here we have a swing high. We have this beautiful swing high. We have this beautiful swing high. Then we have this beautiful swing high. Okay, these 3 points can help us to connect what we call a downtrend line. After connecting a downtrend line from that point, okay, let us use this one which is valid, that one, and then create a parallel line to that line. That is how we draw a downward channel. So price will normally move within this channel when created, but it does not mean that the price will not break through. Here it broke through. Price breaks, retests the channel, and then it moves upward, sorry. Okay, so in a horizontal channel, what happens? A horizontal channel is made up of similar swing highs and similar swing lows. Price usually moves within a range. When we say it in a ranging market, price moves in this format. Price hits a resistance, goes down, hits a support level, resistance, hits support, hits resistance, support, resistance, support, like that, like that. Okay, and this is what is happening in the chart below. When we look at this chart, okay, price was on a clear uptrend. Okay, here it created what we call a consolidation or a ranging market. Then it created an uptrend. Here it retraced, and then it continued in its uptrend. Okay, but we are focusing on a horizontal channel, so we need a consolidation. Price hits this resistance once, second time, third time it is now confirmed resistance. Here we have clear support level 1, support level 2, support level 3, support level 4. So this is a confirmed support level. So we have to connect the resistance areas up, for example, there, connected to that point, and then we connect the support areas also like that. And then where those two, and then that one is where we form a channel, which is a horizontal channel. We form that like that. That is a horizontal channel. Okay, so we want to make some notes about channels. When constructing a channel, both trend lines must be parallel to each other. So what are we saying? You shouldn't draw a channel like this. These are not parallel lines, so that one is no longer a valid channel. And then this, that one does not work. That is also not a channel. This, that is a channel. Okay, so this is wrong channel. this is wrong channel and this is the right channel. Okay, so generally the bottom of channel is considered as a buyer zone while the top is considered as a sell zone. So we shall look at this one more in strategies. So for example, if we have an up channel like that, okay, and then we pretty sure know that the price has been moving in this format, hits the upper channel line, then hits a lower channel line, upper channel line, goes back to lower channel line, upper channel line, lower channel line, like that. So these down levels are considered as buy levels because we expect the price to go high, and then the higher levels are considered as sell levels because price is expected to go down. That's why we say these lower or the swing lows are buy areas, and then the swing highs here are considered as sell areas because every time it hits the upper line, it sells off. Every time it hits a bottom line, it buys again. Okay. So like drawing trend lines, do not ever force the price to the channels that you draw. Okay. A channel boundary that is sloping at an angle while the corresponding channel boundary is sloping at another one is not correct and could lead to bad trades. That's why we do not force them. And then another thing to note before we close up, that the steeper the channel, the less reliable it is. So this one is less reliable, but this one is more reliable. Okay. So the less steeper the channel is, the better. Okay. And then we said price will move in that format, like that. So this one, price moves like that. If it is in a consolidation, price moves in this format. If it is in a downtrend, price moves in this format. Okay. So I thank you so much for watching this video. So in the next lesson, we shall be looking at Japanese candlesticks. Okay. So my name is Susan Jordan. Do not forget to subscribe to this channel, and I'll see you in the next video. Bye bye.